Welcome to Learn Commerce PU online classes. Don't forget to like our video and subscribe our YouTube channel for all the updates.
Hello students, welcome to second PUC Accountancy online classes. In previous class I explained about the procedure to be followed while solving a problem on retirement, that is 12 marks problem. And in my previous class I already told you that either on admission or on retirement you will get one problem of 12 marks. So let us solve 12 marks problem here. You know the steps to be followed. First you have to prepare revaluation account to know the changes in the values of assets and liabilities. Profits or losses should be transferred to all partners' capital accounts in their old profit sharing ratio. Then you have to prepare combined capital accounts of partners. There you have to do a lot of adjustments, like accumulated profits or losses should be transferred to capital accounts of partners, all partners including retiring partner. Then you have to give goodwill treatment depending upon the method that is asked in the problem, first, second, third, fourth or fifth, isn't it? Then you have to pass entries for adjustment of capitals. If there is adjustment of capital is there in the problem, then you have to do it. Then you have to bring down the balances of continuing partners capital accounts and retiring partners balance amount should be transferred to his loan account if nothing is mentioned. If anything is told in the problem to be paid, amount to be paid partially or fully, you have to pass entries in that way. If nothing is mentioned, then we have to transfer it to retiring partners loan account and loan account will appear in the new balance sheet. That is what we have to do. So let us straight away move on to the problem part now. Your question bank, page number 52, problem number 1. 52, problem number 1. I will read out the problem and let us analyze and solve the problem. Digvijay, Brijesh and Parakram were partners in a firm, sharing profits and losses in the ratio of 2:1. So 2:1 means 2 plus 2 plus 1 is equal to 5, 2 by 5, 2 by 5 and 1 by 5. This is the profit sharing ratio. Then refer asset side, cash, debtors, stock, buildings, patents. Patents is an intangible asset, so treat it at par with the tangible assets. Refer liability side, creditors, normal liability. Reserves, what we should do? We have to transfer it to the partners capital account, opposite side, credit side of partners capital account. We have to credit partners capital accounts only what? Not only to old part, that is continuing partners, but also to retiring partner, that is all partners capital account should be credited with reserve in their old profit sharing ratio. That is what you have to do. Then partners capital balance is given, that is the starting point of capital account, that is by balance brought down, isn't it? That's what we have to do. Then adjustments are given. Brijesh retired on March 31st, 2018, that is closing date of the balance sheet. Terms are given. Goodwill of the firm was valued at rupees 70,000 and was not to appear in the books. That means what? We have to create goodwill in the books of the firm by giving credit to all partners capital accounts. All partners capital accounts including retiring partner in their old profit sharing ratio. then they told was not to appear in the books. Goodwill should not appear in the books. That means we have to write it off. Very simple. How to write off the goodwill? We have to give one more additional entry, that is partner's capital account debtor, isn't it? Which partner? How to write off the goodwill? Continuing partner's capital account debtor to goodwill account. Continuing partner's capital account debtor to goodwill account in their new profit sharing ratio. In their new profit sharing ratio. Remember, whether new ratio is given in the problem? No. Whether gain ratios are given in the problem? No, not given. That means old ratio itself is their new ratio. Remember. Here it is 2:2:1, 2/5, 2/5 and 1/5. So Brijesh retired. That means new partners will share in the same ratio as was before. That is 2:1. That is 2/3 and 1/3 will be their new ratio, new profit sharing ratios. Now, bad debts amounting to rupees 2000 were to be written off. We have to write off bad debt. That means what? We have to deduct the bad debt amount which is given in the problem, 2000 rupees, from the debtors. That means the value of debtors will decrease. Debtor being an asset, when there is decrease in the value of an asset, is a loss to the business, should be debited to revaluation account. We have to debit it to revaluation account, and in new balance sheet we have to deduct 2000 rupees from debtors. Third one, patents were considered as valueless. I think we have already dealt with this adjustment in admission of a problem. So when patents were considered valueless, patent being an asset, there is no value for that asset, means what? Decrease in the value of asset. Am I correct? The value is brought down to 0. So that much is lost to the business. 9000 rupees is lost to the business, should be debited to revaluation account. And in the balance sheet, new balance sheet, patents inner column 9000, less written off 9000, outer column nil or 0. That is what you have to do here. Very simple problem. Let us solve the problem. No need of working note, because there are no such issues like calculation of gain ratio or new ratio, nothing like that. Only one ratio is given. So new ratio will be 2:1 among Digvijay and Parakram, which means 2/3 and 1/3. 2/3 and 1/3. 2 plus 1 is equal to 3. So denominator will be 3, right? Yes, let us solve the problem. Revaluation account. Draw the columns. Write the heading. I'll start. Revaluation account. Draw the columns. Yes. Write debit credit. It is a ledger account. Then particulars, amount in rupees. Particulars, amount in rupees. I will not write the heading. Just write. Don't forget to write in the exam. So practice from here itself. Amount in rupees. Particulars, amount in rupees. Let us start. To bad debts account. To bad debts account. Bad debts account. Within bracket, written off how much? 2000, right? Yes, it is. Then to patents account, written off how much? 9000. No other entries, no other entries, close the account, find out the difference, So 11,000 is debit side total. Write the same total on the other side, 11,000. That itself is the difference. Distribute it among all the partners, including retiring partner, because retiring partner was also there till the date of retirement. So by all partners capital account, all partners capital accounts, Digvijay, Brijesh and Parakram. Yes, distribute 11,000 into old ratio into 2 by 5, 11,000 into 2 by 5, yes, 2 by 5 and 11,000 into 1 by 5 is equal to, write the amount, 4,400. 4,400, here also 4,400, 4,400 and 2,200, 2,200. Right here, is this profit or loss? Debit side total is greater than the credit side. This is a loss to the business. So, loss on revaluation, balancing figure. Loss on revaluation, balancing figure. So, that's all. Your revaluation account is done. Let us move on to the next part, that is combined capital accounts of partners. Combined capital accounts of partners. 3 partners, capital accounts, accounts of partners. Yes, draw the columns. Yes, that's all. All right, in short form, write particulars. Debit credit is a must. Debit credit. Then I will write here particulars. Digvijay, rupees. Brijesh, rupees. Parakram, rupees. Write in full. Don't use short forms. Digvijay, rupees. Brijesh and Parakram. Yes, start with the capital balance. By balance brought down. By balance brought down, write the amount, 82,000, 60,000, 60,000 and 75,500. 75,500. Then there is reserve on the liability side. Distribute among the partners by reserves. By reserves, that is old ratio, 2:1, 7,400, 7,400 and 3,700. Reserves distributed. Reserve amount was how much? 18,500 distributed among the partners. Then goodwill account. Goodwill is to be created. Goodwill account debtor to all partners capital account, right? So by goodwill account, old ratio created. Old ratio created. Give credit to all partners. 28,000, 28,000, 14,000. 28,000, 28,000 and 14,000. 14,000. That's all. Let us move on to the revaluation account. If you see here, all partners capital account debtor to revaluation account. So all partners capital account debtor to revaluation account on the debit side, loss. Revaluation account, loss. Write the amount 4,400. 4,400 and 2,200. That's all. Then we have to write off the goodwill. Journal entry is continuing partners capital account debtor to goodwill account. Continuing partners capital account debtor to goodwill account. Written off. Written off. New ratio. What is the new ratio? That is 2:1, right? Yes. 2:1. So no entry in retiring partners column, Bridges column. How much it will be? Total goodwill of the firm was 70,000. So 2:1 if you distribute 46,667. 667 and 23,333. 23,333, right? Yes, that's all. No other entry is close accounts. Find which side is greater. Credit side is greater. Write the total first. Remember, Bridges capital account should be balanced later because the amount should not be carried down. Students have the habit of writing here to balance carried down and they will balance even the retiring partners capital account. But you should not do that. Retiring partners capital account balance should be transferred to his loan account with a separate entry. So don't write here itself to balance carried down, don't write here. It should be transferred to loan account. So you just balance the capital accounts of other two partners, continuing partners. 93,200 credit side, 93,200 third partner, that is Parakram. Then 1,17,400, 1,17,400 and retiring partners total is 95,400. 95,400. Write the same totals on the other side. 1,17,400. Here 95,400. Then here 93,200. Now find out the difference. 93,200 Parakram 67,667. 67,667. Then Digvijay 66,333. 66,333. Right here to balance carried down. To balance carried down, balancing figure. Then refer retiring partner, that is Bridges, isn't it? Now balance his account. There is a difference of 91,000, exactly 91,000. Write it. Dash in other partners column Here you just write to Brigesh's loan account. Brigesh's loan account. Loan account, balancing figure transferred. Balancing figure transferred. Okay. Yes, now bring down the balance. Which balance you will bring down? By balance brought down only these two, because this account is closed. Retiring partner's capital account is closed and his capital balance is transferred to his loan account. So there will not be any balance here. So don't bring down the balance of the retiring partner's capital account balance. So just two partners, 66, 333 dash here and 67, 667. That's all. Your capital account is done. Now let us move on to the last part, that is a balance sheet. We'll draft here balance sheet of Digvijay and Parakram as on full Digvijay and Parakram as on when the retirement took place 31st March, right? So 1st April 2018. April 1st 2018. April 1st 2018, after Brigesh's retirement. After Brigesh's retirement. Write this. Write properly. Yes, after Brigesh's retirement, right? Yes. Let us move on. Cash in hand. Cash in hand. Are there any cash entries in capital account? No, there are no cash entries. There is no movement of cash. So remains as it is, no change. 8,000. Then next comes debtors. There is an adjustment, right? Debtors written off 2,000. So inner column 19,000 less written off 2,000. So net amount will be 17,000. Then stock is there, right? Stock 42,000. Buildings 2,07,000. Buildings 2,07,000. Then last one asset is there, that is intangible asset. Patents will come at the end. Patents, it is written off. So inner column 9,000 minus written off, 100% written off 9,000. Valueless means what? Completely written off, right? So nil. That's all. No other assets. Move on to liability side. Creditors. As it is, no change. 49,000. B's loan account. That is Brigesh's loan account. Write the amount transferred to his loan account. Refer there. Liability side. Brigesh's loan account balancing figure transferred 91,000, right? Write the same amount. Then write capitals. Under that Digvijay and Parakram. Write full name. Digvijay and Parakram. 66,333. That is capital balances. This one. And 67,667. 67, 667. Add it together, write it in outer column, it will be 1,34,000. Now check whether balance sheet agrees or not. It must agree. It will agree. Right here, total is 2,74,000. 2,74,000 is the total of balance sheet. 2,74,000. So with this, your first problem comes to an end. So this is how you have to solve a problem. Solve a problem without capital adjustments. If capital adjustments are given, you have to do some more work. That is, you have to see the new capitals of the firm and you have to distribute among the continuing partners. Then you have to balance to cash or by cash or to bank or by bank, like that you have to do it. So this is how you have to solve. Take assignment, solve the same problem and submit on time. That's the Brijation Parakram problem and submit on time. Thank you for watching this video. Thank you.